For those of you who don't know who I am, my name is Natasha Phipps, and I am located here in Calgary, Alberta, as many of you are. And I have a team of investment specialist realtors here in Calgary. They're all here tonight. I should spotlight them here as we go, but they are going to be chiming in as we talk a little bit about kind of what's happening boots on the ground here. But we are an investment specialist team here in Calgary, licensed at the CIR brokerage, Alberta's largest brokerage, and joined here tonight by some amazing colleagues, Ryan Bond of Mortgage Line, who is my preferred mortgage specialist for investment real estate, and Kristen Wood of CIR Property Management, who is my go-to property manager for all of my clients here in Calgary. So we're gonna be giving you all the details of what's kind of going on here in Calgary. So let's get started. And if you have any questions, just let me know. Feel free to even unmute yourself if you have something to say or you want to chime in as well. But here we go.
Natasha, I have a question.
Yeah. Yes.
I see a few drinks going on, like somebody sipping wine. Are we allowed to do that as well?
You are, definitely. Okay,
good.
I'm finishing my fuel of coffee, and then we'll be converting to wine after. So absolutely get your drinks. This is a casual environment. This is not a formal presentation whatsoever. I wanted this to be like a hangout, okay?
It's hidden.
Good.
Oh, go with your war paint, babe.
Okay. Just mute yourself. Talking right now, whoever that is. Drea, can you mute that? Someone mute that. There we go. Okay, here we go. So again, please turn your camera on. We do want to see you. Can you guys see the PowerPoint?
I'm not looking presentable yet.
I mean, you're
My big sweater.
Cam, mute. Okay. Can everyone see my PowerPoint or no? Because it's not showing share screen anymore.
I can't see it yet, Natasha.
How about now?
Oh, there you go. There you go. See it now.
Awesome. Cool. Okay, so here we go. So this is what we're going to do tonight. We are going to talk about what's been kind of going on in the Calgary market here this year. We got the whole team here. We're going to talk about, high level, also boots on the ground, what you can expect out there in the market, what's been happening this year. I've also got a special guest. Steve Phillips is the broker of record at CIR. He's here, and after I'm done here, maybe he can jump in and give us his 2 cents as a broker of Alberta's largest real estate brokerage. I want to hear what he has to say, and I'm sure he has some valuable things to add to what we're going to go over here. But after that, we're going to do a mortgage update with Ryan. As we all know, the ever-changing landscape of the mortgage world, and get an update from Ryan. And then we're going to talk about property management and the rental market from Kristen Wood and get an idea of what's going on there. And at the end, we'll just have a Q&A of all the experts that are here for any questions that might have come up during that time. Certainly let us know. We want to talk about it. And after that, we have a quick Kahoot game. It's literally like 10 questions. It's not a long thing, but we're going to give away some prizes at the end. And then we'll just have our drinks and do some networking and hang out however long you guys want and get any further questions answered from there. So that's the plan. So let's get started here. So it's no surprise that the Calgary market has been hot. Well, the real estate market period has been hot. This year has been tremendous for most of Canada when it comes to real estate, and Calgary is no different. What is different for us here has been kind of the sentiments and the grind that we've all gone through for the past many, many years. And it is taking some adjustment, I think, for everyone to kind of keep up with what this market is doing. So it's been tremendously hot. If you've been shopping for real estate at all, you've been through it. That it's been very challenging to pick up properties, to find a deal that didn't have competing offers that made sense. This has provided for us as real estate investors some challenges that we haven't had to deal with in quite a few years. And so it kind of made the last few years, it seemed so luxurious when you had so much time to make decisions and do an analysis on a property. Whereas this year, that is not the case. You're feeling that pressure of having to make decisions quicker. So we're gonna talk a little bit more about kind of how we prepare our clients to work with that and kind of what you can do to be prepared in that. But overall, this is the feeling and this is the sentiment that Calgary has finally turned some sort of corner here. And the numbers out there, are really there to prove it. I'm going to switch out of this in a minute to show you just some of the data that you can even find on your own. But like high level stats for Calgary, this is from the end of April. We're not quite at the end of May yet, so I didn't provide the May package, but we'll have that next week available if anyone wants it. But like April 2021 broke the Calgary Real Estate Board's record for sales ever. I mean, that's a huge number, 3,209 transactions in a month. That's a 462% increase year over year. So to see sellers market conditions is a real switch for us here in Calgary. And like I said, realtors, brokers, banks, the land titles office, everyone is trying to keep up with this demand. It's been, some absolute pros for so many sellers out there to see this lift in value, and our market really, really needed that. So it's good to see those kind of good news stories. Months of supply is my favorite metric to kind of check every month for specific communities. Even you can get really dialed in to find out where those, micro economies are, or micro niches are that you might be looking for a community or property type in a community. Even you can get more dialed down with that. But months of supply means the number of supply out there if the market keeps pace at sales where it is today. So for April, 80.1% decrease in months of supply for total residential real estate in Calgary. That is substantial. That is a huge, huge change. Again, that means sellers market conditions when we're under that 2 months of supply. So that's really what it's all about. Low supply, high demand, basic economics. And then what's been really exciting for a lot of Calgarians is that the prices are going up. So for April, the total residential prices are $451,400 is the average price, which is over a 9% increase year over year. Again, very substantial, and some really good news for the Calgary market. So I'm going to show you. I'm just going to switch for 1 second here to show you, because I love this this little graph here. 1 second here. This one. I'm sure you're all familiar with this at the Calgary Real Estate Board. If you're not, we can send you this often. But this chart of the city is very rarely this green, first of all. But you're seeing increases in every quadrant of the city when it comes to the total residential benchmark price. So this is for April. So as you can see, the Northwest, like 10% year over year, that's huge. And even the city center, which, downtown inner city has, in particularly condos, has been the most beat up. It's nice to see these numbers starting to trend in the right direction. And for us as investors, it's creating more and more confidence in the investment space to invest in Alberta. Us as real estate investment specialists are seeing a huge influx of money from outside of Alberta, looking for investment opportunities and tapping into equity, that's maybe sitting in their property in Vancouver or Toronto markets and putting it to work here in Alberta. So these trends moving in the right direction are only increasing confidence and increasing that kind of snowball effect. So this is being watched very, very closely. And to drill down even more with this, is into the actual sectors of detached houses to condos to semis. And I know this is probably a little bit hard to see, but the good news is, as I said, is you're see months of supply for all of these sectors is below 1 to 3, or sorry, 1 to 2.2 for detached, semi, and row. Apartment is still above 4. So the condo market is still, not as recovered as the detached or attached market, but it is going in the right direction, which is really, really pleasant to see. If any of you own, in particular, downtown condos, you know just how badly those prices have been beat up in the last 5 years. So it's nice to see some things actually turning a corner here. So again, this report is available to you guys. This is put out by the Calgary Real Estate Board every month. But yeah, these numbers are just, really encouraging to see. So as investors, like, what do we do with this information, right? So I'm just going to switch back and out on my PowerPoint. And if you're looking to get into the real estate market, which many of you just said in the poll that you were, what does this mean if you're looking to buy in Calgary, and what is actually happening on the ground? So it's one thing to talk about all these stats and these numbers and news articles and all this stuff, but I kind of want to open it up to the team a little bit to talk here. They're out there showing more properties than I am these days. And I think it's important for us to understand, what can we do to, number one, be prepared if we do want to buy in the market this year? What makes sense in terms of strategy still, and we'll talk about that. But in order to get prepared to be out in the market right now, I want to hear from some of the agents on the team how things have been going out there, because this is a whole new experience. And I think we've been kind of spoiled a little bit as investors here in Calgary over the last few years, that there's been so much time. You can really take your time and shop around. So yeah, I'd love to hear from one of the girls who would like to chime in about the market that you're all enduring right now. Dana or Alex or Kim or...
I can start.
Okay, this is Alex.
Hi, everyone. It's insanity out there. So I'm almost every house that I'm showing right now, by the time I get there with the clients, sometimes I already get a message. We just accepted an offer, we're conditionally sold, and I'm still driving to the property. It's the properties that are well priced in good competitive communities, they go by really fast. The last several offers that I've written, they were all multiple offer situation.
Yeah, 100%. Changing super fast, which is hard to manage. And I think, to Alex's point too, the fact that she's driving to a property and an offer is accepted, that's just a really good example of how we're, like, the realtors, everyone is like adjusting to this change. And was that necessarily the best thing for the seller to tell her that on the way there? No, maybe they could have got more offers and drummed up more interest for their client. But for whatever reason, that's kind of what's happening. But it is interesting to see the adjustments that we're all having to make to learn how to navigate this market. And if, a realtor or a mortgage broker or an appraiser, anyone has only been licensed for the last, since 2014 or 15, since the last boom, this is the first time they're experiencing this type of market. So that's important to recognize, that it's been very different in the last 6 months than it has been for many, many years for a lot of these trades. So just to kind of keep that in mind. Go ahead, Dana. I think you were going to add something there.
I was even going to talk about condos outside of downtown. I've been working with a client who was, we also were going into multiple offers on client condos that were outside of the downtown market. So that's areas that are more inner city. And for example, like Tuxedo Park, Renfrew, Crescent Heights, condos that we were going into multiple offers with, usually like 1 or 2 offers, or sorry, 2 or 3 offers, and still selling for over asking. And that's condos that, aren't in the downtown core. So that's, I think, even when we talk about the numbers of condos right now, that's more downtown core versus, areas that some of you may have already bought in, like Cornerstone and Redstone. So it's the condos that are in outer communities that are they're still selling quickly, which is shocking.
Yeah, absolutely. I know I hadn't done many resale condos, and I was shocked how many times Dana kept saying she kept going into competing offers on these. So that's a huge adjustment for us as well. Kim, do you have anything to add, or Andrea? Or does that about cover it?
Yeah, that's pretty close. Taking out first-time home buyers, we've done multiple offers on with several people. They usually are losing out on their first offers, and several times we have to go to bat for finding them something for the first-time buyers, and it's really hard on them to keep going.
Yeah, 100%. And for sellers, if you're selling any property right now, it can also be frustrating because you're getting people get caught up in the fear of missing out. So they're hurrying up and doing something, and then maybe they change their mind 2 days later, but they kind of got caught up in this frenzy. So you are still seeing deals fall apart. Just because it's a seller's market does not mean that it's, slam dunk first deal is it. You are seeing properties come back up several times because of this rush decision that's being made, or they're not properly prepared for financing. So if they haven't got all their ducks in a row, that is, also causing these deals to fall apart. So 100%, the first thing you need to do if you're looking to buy is be ready to go with all those things. You need to get the green light from your mortgage broker. Be very clear with your realtor what it is you're looking for, and specific. And the more specific we can get, the easier it is for us to kind of do a great job for you and figure out from there. For real estate investors, it can be sometimes a little tough. Like I get asked sometimes, like, what strategy should I implement? Or they're open to anything, and in this type of market, open to anything is difficult because I almost need to go find something, right? So the more specific you can get with strategy and what you're trying to achieve with your investments, the better it's going to be to get you into a deal that makes sense. So starting with the strategy and working your way down is what I suggest anyway to reach success. Yes, Ian, we do have all the stats for the bedroom communities we can provide as well. And maybe I'll get Steve, that's a really good question, when I get him to hop in a minute here to talk about some of that, because the great thing about CIR is they also do like the bedroom communities, but also look at the whole province as a whole, which if you're investing in Calgary or in Edmonton, wherever, you do want to know what's going on in the whole province. So yeah, we can absolutely provide that to you, Ian. And speaking of the bedroom communities and the market, I didn't pull up those stats, but we're seeing just as much struggle in Airdrie or Cochrane or Okotoks when it comes to finding decent properties. You need to move fast. We're constantly looking for these off-market deals. So just because you're out in Cochrane does not mean things are necessarily easier to buy. Still very much a seller's market in the residential resale space. So just kind of keep that in mind there. So the main thing, again, to, I'll pull up my PowerPoint here, to be kind of aware of that there are issues in any market condition, right? Just because it's, there's not necessarily a better market, there can be struggles with all of them. And a seller's market is great if you're going to sell, but then if you're going to buy in the same market, now you're dealing with the same issues. So the issues due to the current market conditions we're seeing is number one, usually related to timelines. So again, being prepared, being organized, check with your mortgage broker how much time they need, check with your lawyer how much time they need for closing. Because you may think, 3 weeks is fine, but I can tell you right now that 3 weeks goes super fast when the land titles office is a 3-week wait even to get your registration done. So communicate with all the parties, take control of that, and make sure that you're aware of what those timelines actually are based on what your lender's requirements are and what's actually going on at the land titles office and with your closing timelines. Competing offers, what does this mean? I do get asked about conditions. Can I still put conditions in? Definitely conditions are still happening. There's, of course there is deals going through where there's no conditions occurring. As a real estate investor, unless you're really confident in what you're doing, or you're, tearing something down, or you're, ripping it down to the studs anyway, I do still encourage conditions, at least 90% of the time. So, particularly with the mortgage rules changing and, it's getting harder and harder to get approved for things. It seems like having those financing conditions in there is a huge protection for you. And our market isn't that insane like some other markets where you have to. I know my realtor friends in Ontario, if you told them you needed a finance condition, they would probably laugh at you. But here, that is not the case. You do not need to, risk it all just to kind of get into a property. I don't think that is good advice, and I wouldn't do it myself. Therefore, I wouldn't recommend you to do it either. Unless I said, like, you're tearing it down, you know what you're doing, you're a home builder, you're a renovator, you understand the scope of what you're doing as well when it comes to inspection. Appraisals as well. It seems appraisers are very backed up, just as everyone is, and the timeline for the appraisals can be an issue. I'm also seeing, appraisers being instructed to be a little bit conservative is what it feels like out there. I provided 12 comps for one property on a deal that we had, and it still came in a little bit low, even though we had, a dozen things to compare it to. And the appraiser basically told me that he was kind of just needing to be conservative in his numbers. So keep that in mind, especially if you're doing a refinance. Just because something sold down the street for a certain amount does not necessarily mean that your refinance is going to come in right where you want it to. Again, all of this stuff, the team that you have is what's going to set you up for success. We're working with the mortgage broker who understands what you're doing, like Ryan, is going to really reduce the amount of stress that's coming around, competing offers, appraisals, preparing for closing, all of that stuff. I could not stress that enough. If your team of realtors, mortgage brokers, lawyers, and they all know each other and they're, working to the best of their ability for you on the file, and we're all communicating, that is how you're going to have the lowest amount of stress in a transaction. Whereas if we have, 3 different parties and no one's communicating, it's very, very challenging right now. So the team is critical. As always, build your team first, and then kind of take it from there. And that's been more true now than ever, I would say. For strategies, I just want to talk about what we've been selling this year. We have had a huge sales year this year. We hit the volume we did all of last year by the end of the first quarter this year. It's been massive. Investors are on fire, and locally and out of province, there's just a ton happening. But it's kind of similar things of what we've been talking about in the last couple of years. There's some shifts occurring. Secondary suites are still huge. That has not gone anywhere. Whether we're talking about resale or brand new, we still do a lot of both with our clients. The resale properties and the secondary suite changes that are coming to Calgary at the end of this year is still very much a hot topic, and we are always competing for those types of deals. It's becoming harder and harder to find the good ones. And so if you're looking to take advantage of the secondary suite changes coming at the end of this year, and if you're not familiar with this, I can talk about it at the Q&A. If you don't know what I'm talking about, we can talk about it more then. But secondary suites have always been the cash flow kind of king. I've always felt pretty good about secondary suites in the worst markets, the best markets, and everything in between. The numbers can work, absolutely. It's like the safety in the suburbs. It's as long as you're not overpaying or over renovating, the numbers will work. And Kristen can talk about that on the rental side. Still lots of people doing the BRRRR strategy. I'm going to call out one of our clients here, Erica. She did an incredible live stream with me earlier today talking about one of her BRRRR strategy properties in Montgomery here in Calgary that she's working on right now. And that's just a really good example of taking something, improving it, putting that sweat equity into it like she is doing, and improving the value of that property for herself. So, we can absolutely assist you with that. And there is still good opportunities there. For the BRRRR strategy, finding those off-market deals is, to me, the key, or the deals who are coming into some sort of struggle in some way, whether it's the owner's distress or the property's distress, something like that is what we're trying to do as realtors to find those good BRRRR strategy deals. Same thing with flipping. You make the money on the buy, as they say, everyone knows that. We're starting to come into a time in the last 6 months where I feel pretty comfortable now, advising people that flipping could make sense for them depending on their skill sets. Whereas the last quite a few years, I've been pretty hesitant to, if you've heard me talk before, pretty hesitant to advise flipping unless you're like a full-time contractor and you know what you're doing. day in and day out, just because the resale market wasn't strong enough. We could buy a great property, yes, but selling it for at that premium price is really where the risk was coming in. So that that risk that has come down now, of course, as the resale market is in a seller's market condition. People are buying and deals are happening. So flipping makes sense again. Multifamily in Calgary, not doing as much of that recently. People have been very focused on secondary suites. But I do think after this secondary suites kind of amnesty period passes, there's going to become more opportunities focused, or people are going to become more focused on some of these older multifamily buildings who have very underperforming suites, under rented properties, and someone could easily go into those and start, renovating and increasing the rents and turning them over. So I think there'll be a bit of a shift back to that next year. And then the smaller communities, as we all know, with COVID, everyone is pushing out, and that's no different for Calgary, whether it's High River, Okotoks, Carstairs, Crossfield, people are pushing out further and further, and that can work really well as an investor too. If you're trying to make your money go a little further, or you can't quite afford, the suited property in Calgary, maybe you look at Olds, or maybe you look at, Cochrane, if that price point works for you. So if you want more information on that, certainly talk to the team about that as well. The only kind of point to make there is on the smaller communities, the rules around secondary suites are different. So they're not the same as Calgary, just because they're here in Alberta. Just a little FYI around that. So, and again, we can talk more about that in the Q&A and, dive into strategies, but I want to talk about this because I get asked about this every single day. Is Calgary going anywhere? Well, what about this? What about that? What about the pipeline? What about oil and gas? What about, right? This is a very common thing we talk about with our clients. And so I want to address it here, but do your homework like anything else. The Calgary Economic Development website is my favorite website. They make it so easy to understand all these statistics, and they take a really great approach. If you're raising joint venture money, you're going to run into this question too. What about this? What about that? Is there anyone moving to Calgary? Are people fleeing Calgary? Or there's all these fears that are surrounding Alberta and Calgary. So do your homework, and you will find that there is a lot of incredible things going on here in Calgary. We do not have some mass exodus. And in fact, we have some of the most well-educated, well-paid, very, very diverse workforce here in Calgary. And we're not going anywhere. And I think investors are seeing that now. So just to give you a few tidbits about Calgary that, if you're from here, great. You probably know some of these, but just how livable Calgary is. We're a very, very nice city to live with, a great lifestyle, close to the mountains. And that's from an investment standpoint is something you want to consider, right? GDP, of course, is one of the largest economic indicators us as investors look at. And we do still have the highest GDP per capita in 2020 of major Canadian cities, despite the year that we have been through. So that is something. We're seeing a lot of investment into Calgary. We're seeing a lot of startup companies here. We're seeing a lot of tech companies move here. We're seeing a lot of interesting things happen. We could go into it. There's so many cases of this, but go do the research yourself, right? Go check this stuff out and see how you feel about it. Still have the highest concentration of head offices per capita in Canada as well. And this was cool. This is our growing little tech sector, that Calgary has the highest concentration of high tech workers of Canadian cities. And this is, good. We're seeing this diversification happening in Calgary. And for an investor, this is exactly what we want to see, is diversification happening, right? Should it have happened a decade ago sooner? Yes, absolutely. But we're starting to get there now. And what I love about Calgarians is that we are young, we're educated, we're driven. There's such an entrepreneurial spirit here. And I do believe in this city 100%. So that's kind of my little update on Calgary here. I would love to, Steve, if you're here, I'd love to hear you chime in briefly on kind of some of the things I just talked about from the, broker of CIR, or your kind of perspective and what you're seeing when it comes to business in Calgary and real estate in Alberta.
Yeah, for sure. And you covered so much information. Great job. And thank you for inviting me tonight. It's great to see you guys in the team.
Yeah, thanks for coming.
Yeah, I'm glad that we can make it work. So you covered a lot of it. And I think like, as realtors, we get asked so often is how's the market? Like that's the number one question you have to learn. But there's so many different intricacies, and you mentioned micro markets and that. But two of the biggest things, actually, before I dive into that, we've started comparing to the 10-year average instead of the year over year, because the year over year is just shot with everything that happened last year. So the province is actually performing largely about 60% over its 10-year average, which is just nuts. Everybody's swamped, from conveyancing departments to lawyers to mortgage brokers to underwriters to appraisers, and realtors are leading the charge. So if you see a realtor, bring a snack, like they haven't eaten. So, but two of the things that I think that a lot of people are overlooking is that what's held our market back for years has literally been consumer confidence, and also the first-time homebuyers market. So consumer confidence, everybody thought the market was going to drop out forever since the oil dropped off. And the first-time homebuyers market, which is always fairly steady historically, really dried up. And now with the pandemic and increased savings is through the roof, interest rates are rock bottom, employment is improving, and even the employment that was affected through the pandemic has been the lower income producing jobs. So they're not typically our clients. So we're seeing unemployment rates drop, and all of that has led to the first-time homebuyers market moving in a big way. Now, one of the things I find really interesting is that correlates quite closely to the late 80s, which brought us out of the devastation that Alberta experienced in the early 80s, was the baby boomers in the late 80s hit the mid 30s, and that's when first-time homebuyers are typically starting to enter into the real estate market. Now, the millennials, who are now an even larger generation than the boomers, have hit their mid 30s and are moving into the market. So I think that with the fact that Alberta isn't going anywhere, we haven't dropped out the bottom. We're one of the most affordable cities in the nation. That's just all building towards a few strong years ahead of us, and it's all really, really good. Now, one thing that I'm going to be paying close attention to is the deferral program that they put in place at the end of last year was actually intended to push back the amount of mortgages that go into arrears. And the initial projections from the pandemic, if the lenders didn't do anything, they were going to see a huge spike in mortgages falling into foreclosure in around November of 2020. Mm-hmm. By doing the deferrals, they were able to push that back, and their projection was to see the spike in May of 2021. Now, they're always a few months behind and they're lagging, but right now, as of March, the first quarter of 2021, the amount of mortgages in arrears is at 0.53% of mortgages in Alberta, which is 0.01% higher than before the pandemic. So wow. It all just lines up to stronger markets. And so I think you covered everything else really well. I guess one point in addition to that is that while Calgary is the strongest city in the province as far as production and your increases in transactions, the bedroom communities, Cochrane is one of the hottest markets in the province and has been since June. Canmore is inexplicable. It's just going crazy.
Yeah.
And then Airdrie and Okotoks are close third and fourth. So it's really busy across the board. And we're the slowest market across Canada. Like, it's just crazy.
Yeah, so, that is crazy. Yeah, that's the comment about the deferrals. I think that's a super interesting thing to watch, because that's what everyone was saying, that the sky is going to fall, everyone's going to go into default, there's going to be foreclosures everywhere. So as you said, there could still be some lagging kind of indicators coming, but I think that's a really a really clear indicator to watch as to what's kind of actually going on out there. So I appreciate that. That's a huge hugely helpful input to keep your eye on. I really appreciate you being here and giving us your 2 cents. So this is Steve Phipps, everybody, from CIR. So thank you so much for coming.
Thank you.
And now we are going to jump to mortgages, how we actually get into these opportunities. So I'm going to put Ryan here on Spotlight so we can all see him. Okay, add Spotlight. Okay, here we go. Hi, Ryan.
Hey, Natasha. Thanks for having me. Appreciate it.
Yeah, thanks.
The wonderful world of mortgages. This might be the time when you crack that drink, or to liven things up a little bit. Yeah, it's been absolutely crazy as a brokerage. We are far past where we were for all of last year. The numbers are incredible. We have offices in Calgary and Edmonton, similar to CIR, and the live growth in both centers. The hot topic right now are the new rules. What are they? How do they affect me? Why are they doing this? They changed the rules in 2019 originally to introduce these stress tests. And at the time, I was thinking, okay, Calgary really doesn't need that right now. Maybe other places in the country do need that, but not here. This time around, they're definitely trying to slow the market down, and I can understand and appreciate a little bit of that suggestion this time around, whereas last time I was against it. But they come into place June 1st, so in a few days here. And really what they are, normally when we're doing an application for somebody, well, not normally, in the far past, we would take whatever rate we got and qualify that client at that rate, whatever the going rate is. We didn't have to gross it up or anything like that. So right now, let's say mortgage rates are at 2.25% or 2%, depends on fixed variable. We can't just use that to qualify. We actually have to gross that up, and right now use 5.25% as our qualifying rate for everybody. So this is for insured mortgages, so less than 20% down, and anything above 20%, it's across the board for everybody. So that's what that we've been told to do. How does that affect things? Based on, it's about 4 to 4.5% purchase power that is going to be taken away from you. So as an example, a $442,000 purchase, normally you'd qualify for that, or today you would. June 1st, it's going to drop down to $422,000. So about $20,000 difference on an average price, depending on which area you're buying in. So that's the main point on the new rules. Some people have been calling me for pre-approvals and asking me, well, if I get a rate hold, it won't apply. It's not gonna help the scenario. It's, if you have an offer in place and it's ready to go, then you can get past, be grandfathered with these rules, but otherwise not. So those are the new rules. If anybody has any other questions about them, just message me, or we can talk after the meeting. Natasha mentioned a little bit about timelines right now and what those are like. They're an absolute nightmare. I do have some deals coming my way, and I look at the financing condition date, and I kind of fall out of my chair because I know I can't do it. And some offers that are happening, it's so competitive that they're writing up offers with a shorter financing condition time frame, thinking that it's going to sweeten the deal, but it's actually, we just can't get them done. We do hundreds of millions of dollars with one of our big banks, Scotia, and they were so far behind that they weren't picking up a file until a week later. And I called up our contact out east. I said, what's going on? We're one of your top producers. Why can you get some help? And he goes, no, we have absolutely no extra hands on board. Sorry, Ryan, I can't do anything for you. You're just gonna have to wait it out. These underwriters are not even booking their holidays right now. They're not allowed to. And so it's just straight across the board. So what I've been telling anybody that I'm working with, any clients or realtors, no docs, no shops. Basically, if you don't have your documents with your mortgage broker, you shouldn't be shopping. Have everything, the T1 generals, all that kind of stuff with your broker on their desk, ready to go, ready to be looked at. Otherwise, I probably wouldn't even be shopping, because you're gonna lose 2 or 3 days just from that, trying to find documents after you've written the deal. So make sure and get those in, and so that everything's ready to go. We can't do a pre-approval, but as a brokerage, we know what to look for. We can put the file together and structure it and have everything just ready to go, that we hit send and it's gone. So that's the one of the suggestions I can make for you out there. The other thing that, everybody, on this call are real estate investors, and, we know that we're putting 20% down. So can we have a plan B? What if, we go in with a tighter time frame and, because we really want this property, can we have a plan B? And the answer is yes. And, we have done this several times where we take a look at the client, take a look at their overall portfolio, their strength. And what we can do is actually set up a plan B through a private lender. It's not ideal. It's a little bit more pricier, but I can get private lending financing approval within a day. So oftentimes I'll look at the strength of client and go, I think we need to throw it over to the private, get their yes on it, and proceed with the regular approval, the Scotia approval or the bank approval, and still go that route and then cancel the private if need be. It doesn't hurt us. It doesn't hinder us in any way. So we have looked at that. And the worst case scenario in that is that they may have to put a little bit more down. They may have a little bit of a higher interest rate and a fee, but depends on the deal that you're getting out there. Is it worth it, right? You know your numbers, and if you can calculate that in and it makes sense, then we'll do that. We'll still try and go the A route, but it is a backup plan that we're putting out there for people. And the other thing is the appraisals. Appraisals, it really does matter who your appraiser is and the relationship that your broker has with that person. Right now, because properties are coming in over ask, lenders they're being a little sketchy about properties, and even insured ones. I just got one the other day that's condition date tomorrow. It's an insured mortgage, but it was $40,000 over ask. So the insurer's going, no, I can't. I need an appraisal. And insurer appraisals, we can't control that. They set their own timeline and they go do it, and it doesn't cost the client or anything, but it's really out of our hands. And so knowing who your appraiser is makes a big difference. So what we're doing right now as a company, when that file comes across our desk, if it wasn't an over ask situation, we have systems that we use that we can do a quick sort of snapshot of that property, see what value it was recently. But I also have a really good appraisal company that I just pick up the phone and go, hey, I've got this property. Here's the address. It's coming in at 40,000 over ask. It was originally this. Can you take a look? Yes, Ryan, I'll get right back to you. So as soon as the offer comes in, we're doing that. So she gets out there, she looks up the address, and she's like, yeah, we can support that, move forward. So boom, we're already one step ahead of most brokerages out there. You do that through the bank, they're going to submit that appraisal into a queue that is going to be picked up by who knows who it is. And like Natasha said, or somebody had mentioned before, they're really pulling back because they don't want to lose their jobs. They don't want to come out there and say, yeah, we can support that value. And all of a sudden it drops and the bank's going, what's going on here? We're underwater on this mortgage. So they're tiptoeing around the whole subject. And we, definitely any steps that we can do to lessen the time frame, like the documents, the appraisal, all that kind of stuff, we're really trying to do it. Most lenders are not picking up a file for at least 3 to 5 days. So a 2-week time frame is kind of the way to go right now. So yeah, that's really kind of all I had to throw out there. Just a few tidbits. Hopefully nobody fell asleep. And stick to that motto. Realtors out there, no doc, no shop, and we'll all get through this. So thank you.
Amazing, Ryan. Thank you so much. And I didn't give Ryan necessarily the most proper introduction there. I kind of threw you into it, but like the examples Ryan is giving you is stuff that we're dealing with all the time. We deal with a lot of out of province investors, and they may already have a broker or someone they know, but they don't know a appraiser here. They don't have the ability to pick up the phone like Ryan does. That is huge. That is going to reduce your stress level so much by having the right team for the job, right? So building the team, no docs, no shop. Okay, we're going to tattoo that on our arms here, Ryan. Make sure that that's the case, because it's just not helpful for anyone, and it just is a stress inducer when it comes down to the wire and you're not able to pull the trigger. I love the plan B option as well. You know, if you really want the place and you need to be competitive, then have that plan B and make sure you're okay with either one. And that comes into real estate investing, no matter what strategy you're implementing, not just financing. What if you plan to flip a property and it doesn't work out? Like, always be thinking, what's plan A, B, C? And if you can't live with plan B, especially, then, you know, that's maybe not the best deal for you to be looking into. So thank you so much, Ryan. You know, Ryan is here, guys, as a great resource for you. Our preferred vendor when it comes to real estate investment, mortgages, 100%. Yeah, I thank you so much. So again, we'll be sending out Ryan's contact information as well to everyone that's here. Thank you, Ryan. Now we're going to turn to the rental market space and the property management space with Kristen Wood. I'm going to find you and get your spotlight going here. Here you are. Hi, Kristen.
Hi.
Nice to see you.
Hi, good to see everyone. Thanks for having me.
Thank you for being here. So,
yeah, of course.
Kristen is our property manager extraordinaire here. Again, a huge part of the success of our clients is property management. Buying the property is one thing, but it has to make money for years after that, and it has to operate for years after that. So what I love about the group at CIR is that we all are in-house, we work together, and make these investments do what they're supposed to do, which is make money for you. So thank you so much for being here, Kristen. Tell us what's going on out there in the world of property management and the rental market space.
Yeah, I mean, it is crazy to kind of touch on what is happening in the buy sell. It is starting to trickle down in the rental market, especially in the detached homes. Those are the hot properties right now. And that has trickled down very much so in the rental market as well. As soon as we put a single family home up for rent, it is an absolute fire sale. It is crazy. Multiple offer situations. You know, how can I get this property? You know, I'll send you all the details. I don't even need to see the property. Like, I need this house. So it is crazy right now, which is obviously good because we did not have that last year at all. I'm going to share my screen here in a bit, but I want to go over some numbers, and I just kind of want to touch to a little bit on what Steve was saying with the first-time home buyers. And, you know, on the flip side, we're used to having those really great tenants, those millennial tenants that are secure in their jobs, they're saving money, they're, you know, renting property, and now they're transitioning into the buy market, and we're losing out on those really fantastic tenants, whether they're tenants that are already with us that are now leaving us, or they're just not even stepping into the rental market and just going straight into the buy market. So it's been a little bit crazy in terms of, you know, some properties are hot, and some properties are still taking a little bit of time. And I think it's just what's happening with the pandemic. And, you know, there's still, downtown is still oversaturated with condos. It's, you know, that's not really changing, right? But it's those outskirt markets, right? That those are the hot ones. We're seeing hot markets in the new community of Sirocco down in the southwest here in Calgary. We're seeing you know, the northwest and the northeast, Livingston, Carrington, even a little bit of older communities like Nolan Hill, right, that are around those, you know, 7-8 year mark. Those are hot areas that you want to be in right now. So I'm going to share my screen here so everyone can see. All right, can everyone see this lovely photo I have here?
Yes.
Perfect. Okay, Awesome. So this was pulled from Rent Faster. This was pulled today, and I pulled the 2-year historical data. So you can see here, the far left third is your 2019 to 2020. And then your middle section here is your 2020, of course, when we really started getting into the pandemic. And then 2021, we have kind of our first, it really only goes till about the end of April to the beginning of May. So 4.5 to 5 months of data here. So if we want to look at the trend overall, so you can see the previous year, year over year, are for historical numbers, they follow a nice trend. You know, when we were in the pandemic, we thought things were going to absolutely skyrocket or bottom out in terms of number of listings. We thought tenants were going to leave, they're all going to lose their jobs, they're all going to, you know, have to move back home, and we're going to have all these properties that are, you know, going to have to go up for rent. And now that we have the data, you can actually see it didn't really happen. It's pretty normal, especially if you look at 2019 and that trend, it actually was quite small. So that was really nice to see that we didn't actually get what we thought we were going to get in terms of how bad it could have gotten. And then if you look at the historical average price in 2020, that's to be expected. So you can see here kind of mid-range, that's when things started to dip. That is when we started, you know, really starting to freak out with all of the mortgages and being fearful that the tenants were going to leave. So then we were actually giving tenants, you know, discounts on their rental prices and things like that so that they would stay, right? Because any tenant that's going to pay your mortgage, whether it's the full thing or, you know, 50% or 20%, anything is better than nothing at that point, right? So that's when you started seeing that dip, and you can see it continue all the way down until the end of 2020. Conversely, the days on market are almost spot on. So that was also really interesting to see. And that also carries on to see where your historical numbers of listings are. So those pair well together. Then you move into 2021. And again, you're seeing very similar trends from 2020 to 2021. And then you're also seeing, you know, we haven't really recouped a lot of that cost in terms of the average price. Now, this is average price over any kind of rental property. This includes attached, detached, condo, shared space, basement suite, all kinds. So this is just an overall general look at Calgary. So this is specifically to Calgary only. We're not looking at including Cochrane, Okotoks, those outskirt markets. So we haven't really recouped. In some markets, though, we have, like I mentioned, in the detached and the semi-detached markets, we are seeing, you know, foot on the ground. We're seeing a lot of activity. It just has not yet been reflective in these numbers. But if we were to have this conversation 3-4 months from now, this number is going up. So you will see this number, this blue line here, go up, and will start to trend here as well. Then what we're seeing, which of course makes sense with the demand, is that we are seeing a huge drop in the number of days on market. And that just corresponds with everything that we're actually experiencing being on the ground and, you know, posting properties for rent. Is that, you know, we last year we were over 100 days, and now we're only at around 30. And of course, this fluctuates market to market and the type of property and everything like that. But I'm seeing some, you know, little communities that are only about 14 days on market right now. So less than 30 days that you're looking at, you know, properties being up for rent. I had 2 detached properties that I posted for rent on the same day. And I had them fully rented, leases signed to fabulous tenants within 72 hours. So it was phenomenal to see that kind of reaction for these properties. So it's positive overall. I mean, we still have to be cognizant of the fact that we are losing out to really good tenants, and that's what a property management or any landlord, any good landlord should be doing, is doing proper checks, you know, checking their background check, checking their landlord references. I can't tell you how many tenants leave me and I never get a call for a landlord reference. And there is nothing bad. It's just landlords don't bother calling other landlords and getting a reference, right? So it just, you know, doing those extra steps to make sure now that you're getting those good qualified tenants, because the best of the best are now unfortunately leaving us because they have now saved up enough money or they have the mortgage rates to allow them to now purchase, right? So that's kind of overall what we're seeing. And, in our company, at least, and for the people that I've spoken to, we didn't have a lot of tenants that needed to defer or drop their rent payment. We were very, very, very lucky. We had one tenant that had to decrease their rent by $200 for 3 months. That was it. So, and that just shows in the numbers that, and what Steve said too, with the mortgage deferrals, that what we thought was going to happen didn't actually happen. There's always going to be those horror stories. There's always going to be that, one bad tenant. But I think overall, we did a really, really fantastic job at navigating this.
Wow, that's amazing. Thank you, Kristen. Is
Yeah.
there okay, so the trends of tenants kind of similar to obviously what buyers are doing. They're pushing out to suburbs. It seems like there's a reason I'm not excited about selling a high-rise condo downtown. and that's the reason, because I wouldn't want to go, here you go, can you rent this now for me, Kristen, right? So is there anything these landlords can do, do you think, right now to make their property more appealing in terms of what people are looking for? Is it just, kind of more of the same, like more space?
It is honestly more the same space, honestly. If you do have a condo in the downtown core, you are going to have to be competitive. If you are in a dated building or your property is a little bit dated, you might need to be doing some upgrades. But overall, it is a very strong market for the detached and semi-detached, where most investors typically, are purchasing right now. So you just have to be smart and, really look at the numbers. Rent Faster is my go-to. They have the most data and it is free. You just create an account online and you have access to all of the data. Unfortunately, in the rental market, we don't get as much clarity in the data that the real estate side does, unfortunately. So we really look at, Rent Faster and rentals.ca and those little tiny websites that carry this kind of data. But with Rent Faster having the largest number of active listings in, I would argue, Western Canada, right now on Rent Faster, there's 5,800 and some odd active properties. And 6 months ago, there was well over 6,000. So we are seeing an overall drop in the number, which is creating a little more demand. But overall, there is still almost 6,000 rental properties. And I did some quick math here. 3,800 of them are somewhere between condos, apartment style in the city. And then conversely, there's only about 900 houses, either attached or semi-detached or townhouses. So you can really see the difference, and that is translating into why we're seeing such a demand for those properties.
Yeah, the move up tenant, no different than the move up buyer, right?
Exactly.
In their space. Cool. Well, that was super helpful. Thank you so much for that. What would you say the vacancy variance is between downtown and the suburbs?
You're asking me to pull a number out of my hat. Huge.
Yeah, it's pretty drastic. Like
it's drastic. Yeah. I could probably find a number for you, but it shows in the numbers of the number of active listings that are currently available, right? Yeah. So you're almost at a 1/4 ratio, right? Yeah. So your vacancy rate is going to be somewhere in there. It's going to be 4 times higher in your condos, because it's very rare that you're going to find a single family home in the downtown center, right? They're all condos and high rises. So I would say 4 times the amount of where you would find it in the suburbs, most definitely.
Awesome. Great. Well, and that's very much in line with what we've been, I was going to use the word preaching but I don't like that word, but saying for years now for Calgary, right, is like, get to the suburbs. That's where the safety is. And that's where the consistency is, right? So that's very much in line with everything that we've been advising our clients to do for many years now. So it's very much in line with those trends. So that's Awesome. Is there any, let me just check. No, there's no specific questions here for Kristen, but again, like having the proper team, having someone who knows the market like Kristen does to price your property properly, and also even the specifics of how to market the property, you know, like it's not created equally. Just throwing an ad up is not the same as a professional listing on a rental side, no different than a professional listing on a sales side. There is huge value there. So thank you so much, Kristen. And we have so many huge fans of you. I get incredible reviews of the Sierra Property Management team all the time. So thank you so much for being here and supporting our real estate investors.
Of course, of course. I see a couple questions here. Where do you see rents headed to in the next year or two? So what we find is that the rental market is really quick to react to the buy-sell market. And that's exactly what we're seeing, right, with the detached homes. So it's really going to just depend on what we see in the buy-sell market, honestly, and what happens over the next year or two. I wish I had my crystal ball with me and I'd be able to tell you exactly what I would see, but you know, I had to get it off and tuned up. So I don't have that number for you. But I mean, we can all be hopeful, right, that things can only get better. Second question, does RentFaster allow you to filter by a specific area and property type? Yes, it certainly does. You can actually put in the actual property address, and then you can do a radius. You can also choose house, townhouse, main floor, shared space. You can break it down to as nitty gritty as you need to in PropertyWare. Do you manage properties in Cochrane? We can, yes, manage properties in Cochrane. Yes.
Mm-hmm.
I think that's it.
Amazing. Okay. Wonderful. Thank you so much.
You're welcome.
Thank you so much. So kind of for what's next, that went longer. It always goes longer than I expected to. So my apologies, everyone. There's so much to cover in such a short period of time, but I'd like to do a Q&A now. If you want to, you know, open your mic and you know, speak verbally, please go ahead. I'd love to hear any questions you guys have specifically on any of the topics we covered, or you can throw it in the chat. If anyone has any specific things to cover. I will put us back to a gallery. Nothing
Hey,
else?
Kristen. Yeah, I've got a few. One for Kristen. Hi, Drew. I'm out in Toronto. Question. I know you mentioned in your intro there about Sirocco being really, really hot. So just wondering, you know, what's driving the rental demand there, and is it sustainable? Is it just due to COVID and folks wanting to go to the suburbs and kind of benefit from what Sirocco might have to offer right now, or is it something that's more sustainable and long term in terms of expectation of lower vacancy rates there and just higher demand overall?
Yeah, great question. It's a combination of it's a new community. It is about 2 minutes away from the Ring Road, which is really, really great. There's also a huge development there, Shaughnessy, which is very well established. You also have Floor there, and right across the street, again, about I would say a 1 minute drive, you hit Walden and Legacy, and they have some really big developments happening there in terms of commercials. So you're just getting a lot of jobs. Right now we have a couple investment properties with the suited basements, and they rented right away. And most of the tenants that we rented to worked in the area. They either worked at the hospital in Seton, which they can just get to right from the Ring Road. They worked in Walden, so it's just the job access and the access to the Ring Road. And that is only going to grow, right? Like the Ring Road isn't going to go anywhere, right? So you're also closer to Okotoks. So people, might not want to live in Okotoks, but they want to be close by. Maybe they have family there, and there's not a lot of, to my knowledge, there's not a lot of these similar quality type properties in Okotoks, but they want that brand new feel, that brand new car smell, right? And so that's what they love, right? They love the brand new car smell. I don't know how else to describe it, right? No one else has lived in it. They can't afford to purchase a home that's brand new or build a home, but they have the opportunity to live in it, right? And that is something that you don't really get a lot, and in a tenant, right? In a tenant side. So that's, I think, a big difference for sure for those specific properties in that area.
Awesome, thank you.
I think to add to that too, Drew, good to see you, by the way, is like, Calgary, when you compare it to other metropolitan cities, like even if you live in Sirocco and you work downtown, it's not a 2-hour commute. Like we're still pretty distance wise, pretty close. So even if you live on the outskirts of town or even outside of town, like Cochrane into Calgary, there's still many people who commute all of that distance. It looks far, but when you compare it to, say, Toronto, when you live out in Scarborough or something, you work downtown, like it can take you forever on that highway. I've been there, I've done that. It's a long time. So it's more accessible. And even pre-pandemic, like Calgarians, it's a very much of a driving city. Not as many people use the public transportation, I would say, as like other huge cities. And so you have a car, it's accessible, you want a nice place to live. And so you head to the suburbs because we don't have a lot of density inner city that would give you anything like that.
Right.
Yeah,
Thank you.
good. Really good question.
And then I guess another, I don't know if it's a curveball, but so again, from Toronto, outside looking in, I'm seeing lots of development. I've done more research in the Northeast side with Cornerstone. So just wondering, thoughts on, like, if I can only choose one property, because capital is limited. Any thoughts from across the roundtable here in terms of better fundamentals in either Sirocco or Cornerstone, or are they just vastly different that they're not really comparable? Just love to hear some insights there.
I can take that one, Natasha. So on a rental side, I will say that we are generating more rent per month in Sirocco than we are in Cornerstone and Redstone. I think one of the main reasons is because there are a lot of current properties of that same caliber available in Cornerstone and Redstone. So there is more supply, right? So then you have to be more competitive. There is nothing like this right now in those South communities, these brand new developments, so we can chart. And I'm not saying, it's, pennies to the dollar. It's, about, I would say $50 to $75 variance, right? But $50 to $75 variance per month is a big difference, right? Especially if you look at year over year. I would say, like, for us, the quality of tenant doesn't really change because we still hit the same expectation, right? They still have to hit all of our check marks before they're approved. So I wouldn't say that the quality of person is any different. It's a different demographic, I would say. Up in the Northeast, it's a little more family oriented. And in the South here, it's more single people or couples, or, there's not a lot of family grounding yet. And in Sirocco specifically, from what I've seen, it looks like a little bit, the people that currently live there that are outside of our little bubble, just people walking down the street and stuff, are a little more established, a little more developed. It's not, the 21-year-olds rummaging around or anything like that. So that can bring a lot of security, I suppose, to people as well, that it's a little bit more of an older, not an older community, but you understand what I'm saying. It's not, the 18 to 22 crowd, right? It's, the people that are in their, mid to late 30s and up, right?
Yeah.
There's also less hail in the South.
There is also less hail in the South. Thank you, Steve. Yes, there is also less
I guess
hail.
this property insurance cheaper then?
Repairs are anyways.
That's good. Well, and for Sirocco in particular, this was our first kind of venture into that community. It's a brand new area, and I'm sure you looked at our pro formas, Drew, and I was very conservative. I kept them the same, even though I've told people I feel it's going to rent for more, but until I have the proof is in the pudding, right? So I have the proof to say I feel confident I can add that extra $75 to pro forma. I'm going to keep it conservative because I don't know yet, and it's great that there is low supply and good demand. That's exactly what we want as investors. So really great insight. The Northeast is like very different. I still love that the train is going right by these communities and isn't far away right now. As Steve pointed out too, though, like there is plans to extend the train into Silverado there, which is exciting as well. But yeah, both great. But Southwest address, closer to the mountains, is also always a benefit, right? You tend to get higher property values on the west side of the city, period. Just as a kind of generalization, right? The closer you get to the mountains, the more you tend to pay for dirt. So Laura, you have a question.
Yeah, thank you. My question is actually for Ryan. Ryan, we did a personal property purchase recently, just a month ago, actually. And so, of course, we actually moved out of Calgary and onto an acreage up at Gull Lake. And so part of the process is included an appraiser. My question is, we were working with Scotiabank, and in the process, Scotiabank just sort of sent out the appraiser, had it done, and I wasn't given access to the report. I wasn't given access to the appraisal number. From an investment perspective, how hard can I push with the bank to say, I want my own appraiser and I want a copy of that report? Because I've asked for the information from Scotia and they haven't disclosed it.
It's a great question.
Yeah, that's pretty typical. Did you work through the branch directly?
I did. I worked with one of their managers. I did work with a mortgage broker, and there were some challenges there that we encountered, which sent me back to the branch manager at Scotia.
Yeah, so dealing with the branch, that's kind of what I was talking about before. They'll send it out into a queue, and there's no control over who gets it. And typically, the appraisers that work for these companies that go into a queue are usually junior type people. Going through a broker, you should be able to control that appraisal more easily. But to answer your question, it's pretty unlikely they're going to give it to you. And yes, you can order your own and have that done on your dime. I'm not sure if they made you pay for it or not.
Well, I still had to pay for the report, which pisses me off because
and then they don't give it to you,
something that
right?
I can't have access to. So I'm just wondering how hard can I push with the bank to say I want my own appraiser and you're going to go with my report? You know,
they'll probably allow you to do it. Whether they go with that valuation or not is up to their discretion. Yeah. So you could come back with a higher amount and go, see, I told you it's worth more. And they might just say, nah, we're more comfortable with our appraisal.
So they might do a separate one as well?
They've already done one, right? You were saying?
Well, I'm talking about this what happened with our residential or with our principal residence, yes, but I'm also an investor. We have 3 properties already. So moving forward, my plan is to invest in Calgary. And so on our next purchase, I'll definitely be working with a broker, but when the issue of appraisal comes up, can I push for my own appraiser and you use that report and I'm obviously pay for one appraisal and not 2?
Yes. Yeah, absolutely. And I know a guy, so if you're interested, I'll send you his number.
Love that. Go team.
That would be great. I actually appreciate that. But that's one person missing from my team.
That's awesome. Really good question, Laura. And congrats on the new acreage. That's so exciting.
Thank you. We're so excited.
I know I've been following some of your stories, so that's awesome. Off to the lake for you. Wonderful. Ian, you got your hand up. You got a question?
Hi, Ian from Cochrane. I'll throw this out to the whole panel there. Just looking for your take on the price of material right now. It's gone up 400% in the last couple months. Where do you see that going short-term, long-term? How do you think that's going to affect, well, obviously housing prices are going up, but how do you think that's going to affect buyers, and also how that's going to affect builders as individual companies, whether or not they can sustain already tight profit margins?
This is a really good question, something I've been keeping my eye on really closely, because we've seen this before where markets go crazy, materials are in very low supply, and there is definitely some things that can happen that are not great for all parties. So from my understanding, so my parents own a construction company. They do all exterior finishing in the new construction space. So I'm pretty tapped in there. And then our builder kind of partners, this is a question I'm asking them a lot. Like, what do you think is going to happen here? Like, because they're buying huge volumes, like they know better than I do, or us doing small kind of projects, right? And this is not really getting that much better anytime soon, is my understanding from any sort of projects that they're willing to touch this year. So, you know, we have seen projects get canceled and things get terminated. You kind of can bet that almost every builder in Canada is feeling some sort of pressure right now. And you can also bet that every builder does have some sort of clause in their contract that's going to protect them from unforeseen things. So if the scenario occurs where it's costing them more to build the place than what they sold it to you, it doesn't make sense for them to now build this product for you. So they will cancel contracts. This has happened, you know, in previous years and almost all of the largest markets in Canada. And for us as investors, so who maybe have given them a 2-year loan on a pre-sale or something with your deposit, that sucks. Like they can just return your deposit and say, sorry, but now we're going to resell these at a higher price. So that I think for builders and these companies that cannot absorb these extra costs, it doesn't make any financial sense for them. I think we're going to see more of that happening this year. And there's some really interesting things happening. There's like black market materials out there now. There is warehouses full of materials in Alberta where they are being hustled out the back door like some sort of controlled substance. So it's certainly a problem. We haven't had any of our like clients projects or any, you know, deals that we've done be canceled or anything like that at this stage. But it's a risk. It's certainly a possibility. And for someone that's a renovator or doing a flip or something like that right now, I mean, you need to be very cautious of your costs and very creative. And, you know, and speaking even with Erica earlier, like you have to get creative with your renos because these kind of numbers can really sink a project. But that's kind of my 2 cents in what's happening out there is black market materials. I don't see it getting better yet in the foreseeable future from what I have been heard, but I don't know, is there anyone else who has anything to add to that? Michael, maybe. Michael's still here. Oh, there you are, Michael.
Hey, I could probably pipe in a little bit.
Absolutely.
Yeah, so definitely construction materials are on the rise. I mean, not on the rise. I mean, they've tripled. So now if I want to buy OSB sheeting to build anything from a garage all the way up to a house, I'm struggling to find product. So now I've got suppliers saying, can you sheet your house in plywood instead of OSB, which typically is more expensive. But because there's no resin available to make OSB, a lot of suppliers are just completely out of stock. And so, for example, this time last year, OSB was, I don't know, just under $30 a sheet. Now, if you can find it, you're probably paying $90. So that's just making it really difficult. And a lot of people, and OSB is just one example, just lumber in general. People are saying, I'll sheet my floor with walnut plywood because they just have it in stock. And that, therefore, it just makes it that much less expensive, which just is ridiculous in my mind. But people that want to keep projects moving forward are going to do that. So if you're in a situation where you're building now and you have to, you're definitely paying triple for material. However, that being said, I have been in contact with several suppliers, lumberyard suppliers, that are saying that they anticipate there is going to be a correction by the end of the summer. So there are going to be other suppliers that are going to be coming online that are going to be able to bring product that is going to be less expensive than pricing that is right now. Of course, supply and demand. So like there's a huge supply, right? There's a huge demand right now. And unfortunately, manufacturers just can't fill the need. And there's going to be other people that are going to be interested to say, okay, well, I can do that. I can fill that need. And so that's going to really help to drive pricing down.
Awesome. Thanks, Michael.
Yeah,
For those
no problem.
that don't know Michael, he owns Final Cut Creations. They're a renovation company here in Calgary, and Michael's a real estate investor and knows his stuff. So if you need a good contractor contact, definitely reach out to Michael there. Yeah, thanks for your
I was
input.
just gonna also bring up another question that might have got buried in the chat. It's from Ian. Hi, Ian. He said, do properties near transit attract a higher premium price to buy or rent?
There we go. Maybe Kristen can take that one.
I mean, yes. You're, like Natasha said, we're very much a driving community. So it isn't influxing it a ton. It's, again, it's not saying pennies to the dollar. It definitely does make a difference when you're dealing with the downtown core, because a lot of places either don't provide parking, or people live downtown and want to walk or want to take the train. Downtown here, for those that aren't aware, we have a free line that it goes, I believe, from about 7th to City Hall. That's all free. So if you work and live somewhere between those routes, you can basically transit for free. So if you're living downtown, then yes, that is going to generate a little bit higher, especially if you're closer to that transit line. But realistically, it doesn't make a huge difference, especially if you're living in those outer communities. Yes, you might be close to a C train station, but you might not have to use it or want to use it or can use it. Maybe you need to drive for work. Maybe you need to use a vehicle. Maybe your C train line is going to take you 3 times longer because you need to take a bus and 2 trains to get to your job. So we are very much still driven by a car focused city. I don't know if you can expand on that, or if that's what I'm seeing anyways. That's my 2 cents.
Yeah, I kind of agree. It's one of those things that if you can check the box and have it, good. Like the more desirability a space can have with all of the things that we're looking for as investors or tenants or homeowners, it's no different. The more desirable your property can be, the better. But that doesn't mean every single one of those is going to translate to an extra $50 or whatever it is, right? So desirability is great, but it's not necessarily tangible in a dollar amount. Steve?
I think one of the biggest values to additional infrastructure isn't necessarily higher rent rates and everything else, but the only way that I've seen property values to increase more than what maybe the bulk of the market is doing is by adding additional infrastructure. And we've seen this on the west side with the C train expansion. We expect it along the new Green Line, around the Seton Hospital. We've seen property values jump around the hospital. And then I also anticipate that the new Southwest Ring Road is going to help those insulated communities jump in prices as well. So it's always the additional infrastructure that has that boost to property values. I shouldn't say always, because nothing is always in real estate, but it helps.
Absolutely.
One thing I'll add on to about that as well is I used to live in Toronto, and I moved to Calgary 4 years ago, and Toronto has a very great train system, subway system, and you almost want to take this the TTC is what they call it, versus driving, and the best part about that is most people would stop driving because of it. So even though you have a car, you'll still hop on the train because sometimes it's faster than being stuck in traffic. And I think that's what could happen here in Calgary, especially as like communities like Inglewood are starting to build buildings in Inglewood, which is already a busy, like 9th Ave is a busy road going on to the Deerfoot, which is already a busy highway. So it's going to create more reasons for people to take these trains and LRTs that they're building. So, and they're going to be fast and efficient and energy efficient.
Yeah, really good points. Steve's comments too. I always say infrastructure is really just, if you can get it, like check all those boxes that you can, stack all the cards in your favor, and infrastructure improvements are a pretty well tried and proven, you know, investment strategy that it cannot hurt, and very well it could benefit you greatly. So time and time again in Calgary, we've seen what, you know, real estate property values do when a new train station opens, and that's not going anywhere or changing. So it's just like a roadmap to real estate investing, right? Follow the infrastructure, whether it's hospitals, trains, new roadways, like the Southwest Ring Road is just going to transform our city, even into the Northwest here. I cannot wait for this ring road to be opened and to really open up the west side of our city. It's going to make it so accessible. So, and there's lots of great older communities all along there that are going to become more desirable now, that are really good opportunities for those of us that are looking for the renovation deals. So I know I missed a question. Oh, Drew, for Sirocco, yeah, they cannot start construction on the lots that we have right now until probably the end of June, and it's probably like a 5-month build time. So just to kind of give you an idea there. Yeah, those are legally suited, new build, semi-detached with basement suites that Drew was asking about. We did put the link in the chat there for anyone who wanted to kind of take a peek at it.
So
Any other questions?
Yeah, I've got a ton.
Who is
So
that?
speaking
Oh, there you are.
So speaking of illegal suites, just curious. I know I've listened to the videos on YouTube and etc. But just wondering, you know, once, you know, Calgary's sure cracking down, and it's going to be harder for those who have illegal suites to kind of convert over and conform. But what, just curious, like what would happen, say 2 years from now, if the city catches wind of a landlord that has an illegal suite? Is it, you know, are they going to get fined heavily? Are they forced to convert? Just trying to understand, like, what does that look like for those folks?
Mm-hmm. So prior to this amnesty period beginning in 2018, it was considered illegal to operate these illegal suites. And I knew many of investors who had got caught with these. Back then, it was like your first call would be kind of a slap on the wrist, and they would warn you that you need to, you know, legalize your suite and bring it up to code. But at least from what has happened in the past, fines were absolutely a big one. They would visit the property, and if a fire code violation was happening, the fire crews would actually be instructed to remove your cooking appliance from your basement suite, making your basement suite as a landlord inhabitable, because now you're not providing a safe and habitable environment for a tenant to live, which now means now you have to find a place to put them up because they cannot stay there. So when you start going down those paths, it's pretty risky as an investor. And I would imagine for repeat offenses, the fines will start to climb as well. So I'm very curious to see, though, exactly what these, you know, implementations are going to be. I don't know, Kristen, if you have anything to add to that, but that's kind of what it's been in the past, right? It's just been, they'll take out your cooking appliance and fine you. And the more times you do it, the more money it's going to cost you. And it's just not a feasible strategy anymore. It used to be, because the city made it pretty well next to impossible to do the right thing. You had to go plead in front of the mayor, essentially, and city council to try to be a good landlord and say you wanted a legal suite, and they put you through 6 months of hell, basically, just to try to do the right thing. So it's better. It's definitely better, and it's come a long way. But yeah, exactly what they're going to do after that is going to be very interesting to see. But I expect fines, shutting down by removing cooking appliances, and that'll be that. And the city, as far as I understand, has been, you know, has access to the MLS data, which for decades now, us as realtors list properties and say, here's an illegal suite. You know, we have to put that on the listing, whether it's legal or illegal, in the last few years. And prior to that, we would still write that, whether the suite was legal. So they know, or at least a large portion of them are.
Yeah, if they need to. Okay. So what I'm silver lining, or what I'm hearing, is that really good opportunity to get into a newly built with a legal suite, because folks are going to need a place to live, right? If their own landlord can't convert in time, or if it's quote unquote uninhabitable. So just good information to know. Thank you.
Exactly. And I know maybe Ryan could talk about this too, but like the qualifying process for your mortgage, it's a benefit to buy something where the suite is already legal.
Yeah, definitely. We can use that rental income as part of the purchase and the qualification. So it definitely helps.
Helps with the ratios for sure. Yes. Yeah, absolutely, Michael. Do it the right way, right? So right now, yeah, people are either buying new, like we're not encouraging anyone to own an illegal suite anymore at all. That's the first thing I ask someone if they have one of those properties. Are you legalizing it? Like, get it done. Don't play with this fire that's coming. Do it the right way and be on the right side of things. So either they're buying new, like you said, or if they're here in Calgary and are doing some sort of renovation, then right now they can just meet fire code and bring it up to fire code to get that legal secondary suite sticker. So as of next year, that's all going to change. So it's going to be interesting to see what happens next year for sure.
Yeah. And my follow-up, I think it's the same question that Monique had, is for Ryan. Okay, and Ryan's responded. Does the lender take 100% of the rent into consideration for the legal suite? And I guess it depends. Like all things in life, it depends, right?
100%. Yeah. The most annoying answer in real estate investing. It's usually the way. It depends. Should I incorporate? It depends. That's the most common questions. Should I incorporate? I find.
If you mind, I'd like to chime in and just say, when talking about like legalizing suites, there's a huge benefit to taking advantage of the amnesty period right now, where you can legalize a suite by doing the minimum amount to be able to have a basement suite in a single family detached or a duplex. However, you have to ask yourself at the same time, doing the minimum amount, is that really what you want to do? And is that going to attract the right tenant profile for you? Because there are a lot of advantages to building a suite to code and to the existing code. So for example, if you wanted to legalize a suite now, you're going to put in another furnace, and therefore you're not going to have shared ductwork with the separate suites. So therefore you're not going to have the sound transfer between the suites. And so therefore you're not going to have the complaints that you could potentially have with shared furnace and shared ductwork, etc. So you might have a better tenant retention as a result. You're going to have independent heat control, which is also really great for tenant retention. You don't have your basement tenant complaining about the fact that the main floor tenant won't turn up the heat because it's too hot for them on the second floor compared to in the basement. So you have to also balance that. Yes, you're not going to have to spend as much money to legalize the basement suite because of the amnesty period that we have right now. However, if you spend a little bit of extra money and bring that up to code and do the things that I think are going to bring more value to the property, you could have better tenant retention as a result.
Mm-hmm. Absolutely. Yeah. Yeah, it's just reading the comments here too. Yeah, that's a good question. Or, oh, sorry, what that stopped here. That's my Kahoot thing just came on. It has to be built prior to March of 2018. Yeah, that's exactly right. So I think that was it for the questions in the chat. Do the Truman duplex with legal suites have separate HVACs? Yeah, so anything that's newly built will have to meet Alberta building code. They cannot just meet fire code or, do an in-between code. It has to meet full building code today. So they have fully separate HVAC systems, their own heat controlled, so no sharing of air or heat or anything like that at all. So, which is how it'll be for all properties now to enter the legal suite registry after this amnesty period ends. So as you can imagine, to establish separate HVAC after something's already been built, like you're pretty well starting over again. You're ripping it all out and kind of starting again. So you may as well just do it right from the beginning, I think is also what Michael's getting at. And with you know, germs and stuff these days, having that separate HVAC system does provide some security and confidence. You can have baseboard heaters in the basement. Yeah, absolutely. You do not have to have a forced air furnace to meet building code. You can use a additional heat source as well. Doesn't have to be, but you do need to have a, yeah, exactly. You need to have an HRV for your air circulation because there's no sharing of air. So that's awesome. Anything else?
You're gonna have to cut me off because I can keep going.
Oh.
If you guys are up for, I have another question for Kristen. Yeah, so again, newbie into the investment, the real estate investment space, and I was just, I guess, conversation back and forth with someone on your Facebook group, and I didn't realize that this was an option. So for Kristen, you know, it sounds like, you know, with property managers, there's an option of, you know, signing up longer term where 10% of the rent, gross rent, goes to the property manager. They kind of handle it kind of end to end. They're there. Or it sounds like there's potentially another option where it's quote unquote as needed. So maybe you need some help screening, getting tenants in, and then maybe doing inspections a few months down the road. And it's just really on call as opposed to having someone as a formal property manager. So just A, wanted to validate that are there actually two distinct models, and B, kind of pros and cons and what may make sense for, you know, doesn't make sense to go with as needed for property that's newer, that's likely have less maintenance required, or is it always just good to just do the 10% and just not have to worry about it? So just want to get thoughts from across the panel and other investors in terms of what's worked well for them.
Yeah, for sure. So to not take up too much of everyone's time, I'm happy to have a separate conversation, maybe you, me, and Natasha as well. There's very different models with very different companies. In terms of our structure and our model, we do the straight up management, full beginning to end management, as you have said it. And then we also offer, for us, we offer a list and lease only option. It's not a piecemeal option. It's just a list and lease. So this is good for people that maybe are in Alberta, are you know, looking to be investors, or are accidental landlords, we call them, right? They've purchased a new home, can't sell their old home. They have never been a landlord before. They have no idea what they're doing, but you know, they're happy to manage the day-to-day operations, but they have no idea how to screen a tenant, or they're too busy, or they work on call and they can't show the property. So then they hire us to basically do the showings, screen the tenants, you know, get all the proper paperwork so they're not throwing together, you know, a 2-page lease agreement that would fall apart in any kind of court situation, right? That's what they pay us to do. And then once the tenant has been moved into the property, then, you know, the landlord is then the homeowner, and then the tenant deals with the homeowner directly. We are no longer responsible for the property. The owner gets the security deposit, so we collect it, then we release it to the owner. The owner has to be responsible for it. They are responsible for maintaining it in a trust account and all of that fun stuff. The lease agreement's between them and the tenant. It's not between us when we have it signed. So that is what we offer in terms of our options. I do know there's companies out there that do a piecemeal option where, you know, you can call them up and they'll send out a service company and they'll do, you know, maintenance on call for you. That is not a road we want to endeavor to go down on. We just want to be able to offer a full package service with the emergency on-call included, or just the list and lease.
Yeah. Even for new construction too, Drew, like there's still new home warranty things in the first year. There's still things that have to be coordinated. You need to get your yard landscaped. There is still things that have to be done, even though it is brand new. So, and given you're not here, and you get your first year free of property management, by the way, on those new construction ones. So I highly recommend it if you're not here. But yeah, those kind of list and lease options are always there for sure. So yeah, I just appreciate all of you for taking some time out of your busy lives and schedules to be here tonight. And thank you so much for everyone who spoke tonight, Ryan and Kristen, Steve, and the team. Thank you so much for being here. And yeah, if you want to have a consultation, we'll be sending out a just like a little form to fill out from the event. If you do want a consultation with our team, let us know there and we'll get you booked into the calendar and see how we can help you reach those goals and get going with your real estate pursuits.